Hi, I'm Ashwin with 15 years of experience in catastrophe modeling, insurance and reinsurance analytics. Today's topic of discussion is insurance market size and market cycle. We will discuss the size of global insurance market, how it pans out by line of business and by region. We will discuss the importance of insurance penetration and the current reinsurance capital and its mode of calculation. And towards end of this PPT, we will discuss the insurance market cycle and its bifurcation into hard and soft markets. So let's get the PPT started. The global insurance market is broadly classified into life, property and casualty, and health line of businesses. Put together in 2024, the total gross written premium reached 8.2 trillion USD, with life contributing the most with close to 42%, followed by property and casualty with 34.5% and health with 24%. And why is insurance market size measured in gross written premium? Because it represents the total volume of business generated, capturing full scope of insurers' underwriting activity before reinsurance. As can be seen in the chart below, as on 2024, the developed markets such as North America contributes to about 48% of total gross written premium, followed by Western Europe, which includes UK, is about 22.2%. China is about 10.8%. Asia, excluding Japan and China, is 9.3%. Japan is 4.3%, and rest of the world is about 5.6%. Moving on to the market size by line of business and by region as on 2024. With respect to life, North America contributes to 29.8%, followed by Western Europe, which includes UK, is 29.1%. Wider Asia is Asia with Japan and China inclusive, and it is about 37%, and rest of the world is 4.2%. In property and casualty, North America slice is about 54%, followed by Western Europe 20.7%, and wider Asia is 17.2%. While in health, North America has much larger slice of 70%, followed by wider Asia, Western Europe, and rest of the world. Now moving on to the insurance penetration. Insurance penetration measures the country's insurance market relative to the economy. It is calculated as total gross premiums written upon its gross domestic product. As can be seen in 2024, the global GDP is 111.3 trillion USD, and we know that global gross written premium is 8.2 trillion USD. So the global insurance penetration is 7.4%. Likewise, we can calculate country level insurance penetration if we have the country level gross written premiums and country level GDP. A higher penetration rate suggests a more developed insurance sector, while lower penetration reflects a potential lack of protection for which insurers can provide coverage. Now that we know the global insurance market size, it's split by line of business and by region, and the insurance penetration, let's discuss about the reinsurance market component. As on September 2025, the global reinsurance capital stands at 760 billion USD, in which traditional reinsurance capital stands at 636 billion and alternative capital stands at 124 billion. Note that the traditional capital includes all line of businesses such as life, property and casualty, and health, while alternative, all the third party capital only includes property and casualty as it focuses on natural catastrophes and property risks. Hence, 760 billion USD is the aggregate reinsurance capital for the entire industry. Let us see how do we arrive at 760 billion USD reinsurance capital. Reinsurance capital is calculated by adding the shareholders' equity, which is also known as policyholders' surplus, of each reinsurer available in the market. Shareholders' equity is calculated as total assets subtracting the total liabilities. And the shareholders' equity can be found in annual reports of reinsurers. So, adding each individual reinsurer's net worth is how we obtain 636 billion USD, which is also called as traditional reinsurance capital. And the remaining 124 billion USD, which is third party capital, comes from leading pension funds, hedge funds that invest in cat bonds, reinsurance sidecars, collateralized reinsurance, and industry loss warrants. We may notice that insurance market size is based on gross written premiums, which is the total volumes, while reinsurance market is based on capital available or the net worth. This is because the insurance market reflects the total volumes of business written by primary insurers, while the reinsurance market is viewed through available capital as their ability to absorb catastrophe risks depend on their financial strength. The last segment for discussion is the insurance market cycle. It can be described as Industries swing between hard and soft market conditions driven by competition, profitability, and capital flows. Imagine a scenario where a large catastrophe or event occurred and the industry suffered major losses. What happens post this is that the underwriter becomes strict, coverage is narrowed with more exclusions, and not many carriers are available. This becomes seller market and premiums start rising. This is called hard market conditions. The opposite of hard market conditions result in soft market. No major claims available and available capital is high, which results in competitive underwriting, and many carriers are available to attract buyers with broader coverage. This results in lower premiums. This scenario is also called buyer's market. Both insurers and reinsurers can simultaneously experience hard market, or both can experience different market cycles. Reinsurers react faster than primary insurers, thereby tightening terms before primary insurers pass this cost on. So this is a diagram representation of hard and soft markets. As discussed previously, in the hard market, coverage availability is minimum, rates rise, resulting in strong profits. This results in capital flow into the market as carriers chase market share, broadening the coverage, resulting in rates falling. And suddenly there is an event which results in loss realization, poor investment returns, and again the rates start to rise. This is called the market cycle. Hard to soft is the rate correction, and soft to hard is the turn in rates from low to high. This marks the end of the PPT. Thank you for your time and let me know for any questions.